Today we wanted to talk about budgeting and expenses for real estate rental properties.
And I'm going to say people who budget are going to be weathering the storm. We want to have this good steady income with rent. We want to make sure that we are planning for the expected and unexpected. We're going to go into more details about this kind of stuff. We're going to go into the nitty bitty, talk about the rental property and talk about would it be a financial pitfall or how do you make sure that you're going to always maintain steady profits. So we're just going to kind of talk about how to budget for these things so we're not afraid of something that we don't know. We're taking control of our money, we're taking control of our finances, and we're taking control of these rental properties that we want to buy because we want to make sure they're income producing and not money pits.
Exactly. And hopefully you use this roadmap to navigate the financial intricacies for your rental property investment. And the first thing that we wanted to talk about, really understanding the expenses. Therefore, what is about the expenses?
Well, we're going to break expenses into two various roles. One is fixed costs, right? Which is the very ones you can imagine right away. What is the monthly payment I'm going to be on this? If I bought this, what is my mortgage going to be? What are my taxes going to be? What are my insurance? What's my HOA? What are the fixed costs that are going to be there every single time that I'm not going to be able to get rid of at all?
Exactly. Therefore, each mortgage, we have four things: principal, interest, homeowner's insurance, and also property tax beside an HOA if you are purchasing your single family home in HOA.
And if you're buying your first one, don't just assume the insurance is going to be the same as your own insurance on your own home. Insurance for rental is higher because it's a rental. So you're a landlord, so you have to have a hazard insurance as well.
Exactly. The next thing that we wanted to talk about is really a variable cost. What those are variable
costs? This is where
costs?
The fears come into play. This is where things can change over time. Number one is maintenance and repair. So upkeep of the home, unexpected fixes, plumbing breaks, floors break, things happen. We need to fix it. So maintenance and repairs is number one.
The next thing is the capital expenditure or CapEx, which is larger scale property improvement or replacement, something as my wife said, like a new roof or AC unit. This couldn't be a big items on the house.
And a variable that we also have to take into place is vacancy. So your rental property is not going to be 100% occupied every single time, all the time. Loss of income is why the house is going to be unoccupied for a while, so we have to plan for it and have a plan of action so this vacancy rate does not stay long.
Exactly. Now
let's do our introduction. Let's hit it. Hi, it's Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Now let's talk about the budget.
Now we wanted to talk about the basic budgeting for rental property, which allocating some monies to from your income and also toward the expenses over the time for a specific period.
Okay, so we're going to create this budget. Number one is you want to estimate how much the rental is going to be, how much are the rent payments going to be. You need to know what the rates are in the area around as well, because you want to make sure that your rates are comparable.
Exactly. An optimum way, if you can rent it, which is 10% ROI or 1%, is for example, $200,000 house, you get $2,000 rent per month, which is going to be amazing.
Okay, number two is going to be list all of your estimated expenses. So if you have data, that's amazing. You can estimate on similar properties in the area what they are going for, what costs might be. So I would have a list. What's number three? Number
three is accounting for the vacancies. Ideally, you want to rent it all the time, but always you need to factor 5 to 10% of your annual rental income for the allowance of the vacancy.
Right, so people move and you need to refill. So we have to have a plan for that. Number four is you should have a CapEx fund. So make sure that you're allocating money every single month for the future capital expenses. This is again the roof, the HVAC, not small expenses, big expensive.
But the golden rule is to put that 50% of income for those items. And
all of these items,
which is literally if you get $2,000 rent, $1,000 goes toward this. And the next thing is considering property management costs, which
You don't have to do, but if you do choose to do it because you want a hands-off approach, then we want to
or you are not in that state or that city to do it.
You want to make sure that you're hiring someone who is good. And the numbers typically go from 8 to 12. In our area, it's typically in the middle, but
Which
it's
is
8 to
10%,
12,
yes.
typically nationwide.
Now, the next item would be for you the cash net cash flow. No, What is that?
You want to make sure that you are subtracting all of your estimated expenses from your expected rental income to determine your monthly cash flow. So again, we're just doing some math right here just to see if it's going to work. This house is going to work for you.
And the last item we wanted to plan for are some unexpected emergency situation that might happen, and repairs or any legal issues. No?
Right, so now let's talk a little bit more in detail. So I would say you want to have regular expense tracking. So you want to track how much you make, how much you spend all the time, because if you look at the numbers and you see something is going awry, you know you need to take an action. So number one, making sure you're following these numbers every single month. So you use this sort of accounting software.
Exactly. And then regularly reviewing what we should do.
Check it. Make sure nothing is changing, because it's going to change your financial portfolio and your financial performance. So you want to always have quarterly reviews, monthly reviews, just to make sure everything is going as planned. So there's no unexpected things going on. But unexpected happens, but know what they are.
Exactly. Now we wanted to talk about the scenario. Let's say your mortgage payment for monthly for the property that you are purchased is $1,200 a month. Property tax are $200 per month, and let's say $100 for homeowners insurance.
Okay, and $50 for HOA.
And $50 for HOA.
All right, so your estimated maintenance on this has $100 per month. Your CapEx would be $150 per month. Your vacancy cost is $100 per month, assuming it's a monthly rental of $2,000, and your property management in this situation would be $200. So in this scenario, does it work?
Therefore,
rental income $2,000, mortgage income $1,200. Mortgage is $1,200, property tax $200, insurance and HOA $100, $150, another $100 for maintenance, another $150 for CapEx, another $100 for vacancy, another $200 for property. And what's the net cash flow?
Net cash flow in this case is going to be zero.
Right, but it's still maintaining cost where if you can increase your rent, it will increase your budget. So that's always a good thing. So it's not a negative, it's still a positive, because it's zero and you can kind of grow this as long as you're taking care of the property and rental prices are increasing.
Therefore, really the rule is here, the good budgeting is as much as what it is about the flexibility.
Right, being flexible. You want to make sure that you are planning for the predictable, the unpredictable. You want to plan for the future as much as you can, and therefore you can turn this property into a steady source of income in your bank account every single month, and that's kind of the goal.
Exactly, and don't forget to call us at
watch this video.
Watch this video and call us at 252-327-3357. We are Alan Victoria, real estate agent in North Carolina, specifically in Greenville, Winterville, North Carolina.